So I just want to make a quick video here today talking about the strength of GameStop's balance sheet and how I believe it will allow the company to deliver value to shareholders over the long term. So we see the company shifting to be net income positive, free cash flow positive, and just overall profitable into 2023 and beyond, or at least that seems to be the commentary and how everything's going. So if that continues to happen, they will continue to stack cash. They have very limited amount of debt on their balance sheet, under 50 million, and it's at a very low interest rate, under 3%. I think it's 2 and change, maybe even below 2%. Forget off the top of my head here. But if you look at cash equivalents, and marketable securities combined, it's $1.4 billion. Cash equivalents could be a money market fund, which, by the way, will earn you about 4.5 to 5.5% interest right now. And then if you look at marketable securities, if it's a treasury bill, for example, let's say it's a 6-month treasury bill because it'd be under current assets, which implies it's maturing in less than 1 year. So let's say it's a 6-month treasury bill. The interest earned on that is not going to show up until the marketable security actually matures. So as these marketable securities are maturing, they'll continue to obtain more cash because of the interest rates and the interest rate environment we're in. So continuing to stack cash and earning cash on their cash will just allow them to have other opportunities. Will they maybe issue a dividend? Will they maybe do some share buybacks? I think those things are more further down the line. But what I see happening more so in the short term is an acquisition and or developing in a new space of business, maybe creating games themselves, maybe partnering with streamers to do streaming events, maybe more in-store events, but it's something that's not in place yet that would cost a little bit of money to have put in every store or to be available online, whatever it is. My point is they can use their cash to get into new business ventures, make acquisitions, eventually do share buybacks on the line, potentially dividends, all these sorts of things because they have a strong balance sheet and they have a good cash position. And paying off all the debt and raising cash before the interest rates started rising shows me the company was really in touch, and the executives running it, as well as the chairman of the board and some other board members, were very aware of what was happening and what was to be happening in the future, which gives me confidence that the next few years they have perspective of what's going to happen and a plan for it as a whole. But, time will tell. Numbers don't lie. So we'll just see what happens over time. But just some of my thoughts here. Hope you have a good day.